Let's begin with Jim, who can explain what's up with Texas this morning, Jim.
Well, we're down here to look at what I regard as being enemy territory, admittedly, but I'm at the Star at Frisco. This is another Jerry Jones world, just kind of like Jerryland where the stadium is. But this is a practice field behind me. We actually have real, legitimate Cowboys here. Can't touch the ball, but they're throwing, I don't know, say invisible balls. And this is just one of the most exciting places on earth because it's a brand new city. It does remind me of Disney World. Stock would be 120 if it was part of this. And what I have to tell you is I got Cotero on, which is natural gas and oil. And I've got maybe the interview of the day, which is Southwest Air. We've got to find out what's really going on there. But it's Jerryville. And what Jerry's got to say is, don't forget, he's big on natural gas. Obviously, he's big on how to value things. And, David, I got to tell you, what the spirit down here and what Jones is accomplishing is it's unique to Texas. You just don't find it anywhere else in the country. David, they love capitalism down here. It's kind of an odd thing.
So are you going to stay and maybe not come back?
No, because every second's torture. Because this is a world that is opposite of the Eagles. But I accept it. For today, I am a Cowboy. I will admit that. Today, I am a Cowboy. That's what you have to say. You have to accept that, Carl. I am a Cowboy.
We'll save that piece of tape maybe and play it later. So let's talk some earnings this morning, Jim. It's a busy week, as we said, the busiest. And B of A over the weekend pointed out last 5 earnings cycles, that busy week, market tends to do pretty well.
I think it's going to happen. I mean, when you look at the stars of this week, you've got things like, look, you've got companies, name brand companies like McDonald's. They just don't miss. We've got companies that I think are Amazon. Maybe we get a little more about who's being let go. They're letting go of the $500,000 guys, not the $50,000 guys. I think that we're going to see, you're going to see good tech numbers from Alphabet, but we need to see layoffs from Alphabet. It's still going to be the story of tech, which is they need to lay off people. Everybody else is looking for people to hire. David, it's really a kind of an odd thing where you have too many people who make a lot of money in one industry. Meta has shown you how to do it. We're going to find out maybe even more layoffs at Meta. And then we have other companies that just need employees badly. And I think that you're going to see those companies actually have really good numbers. And a lot of companies, David, are surprisingly doing much better than people realize. And the strategists seem very out of sync. They seem to keep thinking that there's going to be missed numbers. I'm just not seeing it that way at all.
And what is the reason that you're not seeing it that way?
Because last week we had the regionals. Those are the ones that are the weakest part of the U.S. economy. The regional banks did absolutely as awful as we thought. We have the last one that I'm worried about, which is tonight at First Republic. And then after that, we're just going to have regular plain vanilla companies that do very well at this point. Right now we have all the regional banks up. Every single one of those companies disappointed. Every single one. But we're past them. And now we've got good quarters coming.
Indeed. We did have some activity on Friday night, Jim. Moody's downgraded several, including, I think, USB was in there, and I think I'm looking for the other ones. And then, we'll keep an eye on the Journal piece over the weekend looking at the argument that the banking crisis, Jim's not over, in that a lot of small and medium-sized businesses are getting phone calls, the Journal argues right now, saying, come year end, you may not get that loan that you were counting on. And that's sort of the draining credits picture that some argue will be a drain on the overall macro, too.
Carl, you're absolutely right. I mean, one of the things that was outstanding, what everybody talked about from a regional perspective is we have deposits, don't worry. We have deposits. They did not talk about loan growth. They were shying about anything commercial real estate. They're saying, listen, we don't have that much. These banks do a lot of lending against homes. They do a lot of lending for auto. It just, to me, seemed like, guys, we're not going to do much at all except for preserve capital. They're waiting for better rules, more clarity from Washington. David, these were the banks that kind of, I don't want to call them the backbone, but in every individual town, they made things grow. There is going to be a big slowdown from these companies. I do hope that the Fed recognizes that when you have a Huntington or a Comerica or a Key not doing that well from the point of view of worried about being deposits but not worried about growth. I mean, holy cow. These companies were always growth engines. Now all they're saying is we're not going to be a problem. A lot of these companies, I didn't even know they were thinking that they might have been a problem. Huntington Bank was on. They had a very good quarter, but they went very much to say, listen, we're not in trouble. And if that's what you want to buy a stock for because they're not in trouble, I'm looking elsewhere. I don't need to be with companies that say they're not in trouble.